Going on, guys, I'm your mentor Arkhamtrades and welcome back to another YouTube video. And in this video we're going to be going over the complete guide to mastering turtle soups. In the first module we're going to be talking about the candlestick anatomy theory and open, high, low, and closes. Then we're going to be focusing on the higher time frame structures to lower time frame executions. And then we're going to be simplifying turtle soup in only 3 steps, keeping things very easy and simple. Towards the end, I'm going to show you guys a live chart example of a real trade that I took utilizing the same framework that I'm going to teach you guys, doing a top-down analysis approach. Before we begin, let's talk about who am I. Well, I'm Arkhamtrades, and I've taken more than 500 plus trades utilizing the turtle soup, and I've created my own structure and framework of how I'm able to predict the low / high of the range more than 80% of the time, utilizing the specific times during the day as well as specific levels that I'm going to show you guys today. And towards the end, I'm going to break down this exact trade idea right here. Not only am I going to give you the exact framework and structure of how to master turtle soups, but I'm going to show you guys a live trade example, just showing you guys that I actually use what I teach you guys and I am a full-time trader. You can see here on my Top Step 50K, this is an express funded account across all 5 of my accounts here, profiting a little over $400 on the day across all 5 of my accounts, making me a little over $2,000. And these are the type of trades that I take pretty much consistently every single day. So I'm going to teach you guys exactly how I was able to capitalize on this trade, and hopefully you guys can take notes throughout this video, backtest, and achieve similar results. First, we have to cover the candlestick anatomy theory. The candlestick anatomy theory, or CAT, is very simple. It's basically when every higher time frame candle is built from lower time frame structure. In this example, our higher time frame candle would be the H1 time frame, as we can see, and from that 1 hour time frame, it's consistent of 4 15-minute candles. The H1 time frame represents our big picture, and the 15 minutes time frame gives us a narrative. So we have the open, high, low, and close of this 1 hour candle. But if we look on the 15 minutes time frame, we can clearly see that price opened up here. This would be the M15 candle 1, and then M15 candle 2 comes lower to establish this low here. We'll talk about that a little bit more later on. And after finding support here from the second 15-minute candle, the third 15-minute candle sees this push higher, and then we establish that last candle close right here. Candlestick anatomy is something that I use consistently every single day to be able to be one of the best traders when it comes to catching turtle soups. And when it comes to catching the turtle soups, we can utilize this framework to make it very simple. As the next 1 hour candlestick opens up, following that price opening, we want to see a manipulation lower, right? In this case scenario, we had a manipulation to the downside, right? We had the opening price, then we saw this drop lower. This manipulation lower has to tap into a higher time frame point of interest. Let's say a 1 hour fair value gap, 1 hour order block, or maybe a 1 hour or 15-minute rejection block, right? 1 hour or 15 minutes, one of these higher time frame points of interest. And then on that 15 minutes time frame, once we see price tapping into that point of interest and then reject from that level, you can see here on the second 15-minute candle, we tapped into this, let's say 1 hour fair value gap, and then we see this rejection from it. Seeing this push higher, right, we can take our turtle soup right here, or let's say you didn't take this turtle soup down here as price tapped into a fair value gap. You can take this turtle soup right here on the third candle as price breaks above that last 15-minute candle high. You can either take the turtle soup at the candle that taps into the point of interest right here on the second candle, or you can take it off the breakout setup, breaking back above this last 15-minute candle. This gives us the confidence that price has established a low because we came down and tapped into a level of support. Following that level of support, we get that rejection. That rejection on the 15 minutes is one of the most important levels that you guys want to pay attention to when it comes to catching turtle soups. In the following 15 minutes time frame, we can anticipate bullish engulfing candlesticks after our turtle soup entry. So after we get our entry down here, we can anticipate the M15 candle 3 to push higher, and then the M15 candle 4 to continue pushing in the same direction. Our candle opened up, created this low before then seeing this expansion to the upside. So my goal when it comes to catching turtle soups is I want to be taking the trade within the manipulation of that 1 hour candle. And obviously we can utilize the 15 minutes as our lower time frame execution. Now we can get into our points of interest. And obviously when it comes to candlestick anatomy, there's 2 ways to look at this. Price either opens up, creates the manipulation lower into this blue level, which this would be referred to as our point of interest, right? Comes down into this blue level, finds support to push higher. Or we could see it from a bearish example where you can see price opened up, came higher right here, right? Price opened up, came higher, came into that red level right there, gave us that rejection wick that we talked about right here, right? Gave us this rejection, and then off the third candlestick we see this drop lower, continuing to see lower prices until we establish this low, coming back into the opening price. The market goes in two ways. It either goes higher or it either goes lower, right? Just keeping things very, very simple. And obviously the first point of interest we want to pay attention to is fair value gaps. So we're looking at the 1 hour time frame here. Price created this fair value gap, which it's very, very simple what a fair value gap is, right? We have these 3 candles, and during the middle here, price creates this gap from this first candle's high and this third candle's low, right? Once price comes down within that gap level, it should anticipate price to find support to continue to push higher, right? So on the 15 minutes time frame, this is what it would look like. Price would open up on this 1 hour time frame, and then we see this manipulation lower into this fair value gap. And then from that fair value gap, we can anticipate higher prices leaving that area. We had that first 15-minute candle open up, then we had that manipulation off the second candle, third candle saw this push higher, and then the fourth candle right here, we see this continuation all the way reaching back up into these highs here. And the next point of interest we can pay attention to is order blocks. So an order block is very simple. It's when we have a last up close candle in this example, and then price creates this bearish engulfing candlestick, closing back below the opening price. So once price opens up here, comes higher within this last up close candle, it should act as resistance, reaching back lower prices. And obviously on the 15 minutes time frame here, by the schematic, we can see price opened up on this first 15-minute candle. Then the second one, we see this rally higher. From that rally higher, we can see price tap into that order block level, and then we see price dropping lower and lower. You can either frame your short setup when price taps into that order block, or you could potentially frame your short setup once price comes into this order block and then sees a rejection from it, which would be identified by this reaccumulation right here. Whether you get the top entry for the turtle soup or you get the reaccumulation entry, right, these are both very solid setups, catching that overall move, reaching back below lower and lower prices. And our third point of interest is obviously rejection blocks, right? Keeping things pretty simple. Rejection block in this case scenario would be when price has this long wick. We can obviously see this long wick inside the marketplace. You've probably seen this on your charts 1,000 times, but you didn't know that this was a level of support resistance. Well, it is. If we incur Fibonacci from the opening price right here to the low of this wick level that created this long wick, we can obviously get our 50%, and that 50% can act as a level of support. So we can see here off of this 1 hour candle, price opened up, saw this manipulation lower, tapping into that 50%, and then we started seeing this expansion to the upside. If you're able to capitalize on a turtle soup right here on the 1 hour time frames, you can put your stop loss back below the low of this 1 hour. This gives you a good risk to reward. So let's say you were able to frame the long here at the 50% of this wick, or maybe you framed the long as price was rejecting from it, showing a level of, reaction from that level. Right, if you can frame your entry within that wick level or near the opening price, you can adjust your stop loss back below the low of that 1 hour candle. You're anticipating this to be the low, and obviously the next 1 hour candle should see that expansion going in the opposing direction. So these are the 3 points of interest that you want to be paying attention to when it comes to catching your levels of support and resistance. Our main emphasis is to be trading during the manipulation. When price is going higher in this case scenario, I want to be shorting inside this order block. When price is going lower in this case scenario, I want to be going along within this bullish fair value gap. Same thing with the rejection blocks. And if you guys want access to the PDF that I just showed you, plus the trading plan going over the specific times you want to trade it, as well as the full checklist and curriculum that I use when it comes to catching turtle soups, I will be putting it inside of the PDF section inside of the free Discord community. All you have to do is click the first link in the description and join the free Spark Train community. I'll be putting it inside of the PDF section as soon as this video releases, so you guys can get access to it for completely free. Once you guys get the PDF, it will also include a trading plan and obviously how you would backtest this exact model, so you guys not only learn from this video, but can also implement it, backtesting it. And if you guys want that full PDF, just click the first link in the description and grab you a copy for completely free. Coming into the charts here, I'm looking at the S&P 500, and we're going to be breaking down the trade that we took this morning, which made us a little over $2,000 across all my funded accounts. If you guys check the PDF in the trading plan section, I talk about the 10 to 11 o'clock turtle soup, and this was the exact trade that I took this morning. Just before 10 o'clock opens up here, I'm on the 1 hour time frame. And on this 1 hour time frame, I just want to mark out my points of interest as well as any potential liquidity pools. We can identify this previous low inside the marketplace, as well as we do have this 1 hour fair value gap right here. If we look very closely here, we can see this gap separation right from this first candle's high to this third candle's low. So this gap separation creates a fair value gap. Coming into a marketplace this morning, I'd want to see if we can come lower to take out this level of liquidity and then tap into this fair value gap level. This is what you would call an inducement. So instead of price just coming down into this fair value gap, price also takes out a level of liquidity. This creates a high probability scenario that once price potentially reaches down into this level, it has a high probability of finding support. This specific price range would be my level of support I'd want to see the marketplace come down into before framing my turtle soup. We can clearly see that during 9 o'clock, we saw this drop to the downside, right? You don't want to be that trader that just buys when the marketplace is going lower, right? A lot of people are buying as the marketplace is going lower thinking they're doing something, right? No. As a trader, you always want to exercise patience and you want to wait for price to give you the highest probability opportunities. Instead of just buying as the marketplace is going lower, you have to buy within your points of interest. And then obviously pairing that with candlestick anatomy, this gives you one of the best probabilities in all of trading when it comes to catching highs and when it comes to catching lows within inside the marketplace. So I want to see the marketplace come down into this level, get that manipulation during 10 a.m., right? That manipulation on the 15 minutes. I'd want to establish my overall long position coming back higher prices, because we have to understand when the market sees a expansion to the downside, price has to give some type of correction move. If the marketplace was going higher, price has to come lower to give some type of correction before a continuation or potential reversal. So I'm on the 15 minutes time frame here, and to my right I have my indicators here. And if you guys want the indicator, I did put it inside of the PDF, so make sure you guys check that out. Indicator right here shows me my higher time frame candles, shows me my 1 hour candle, and this shows me my daily candle right here. As the next 1 hour candlestick opens up, I'd want to see if we can open up, come lower within this fair value gap range to find a level of support to push higher, right? This would be classified as our candlestick anatomy. Let's see how the next 1 hour candle opens up. So we can see here the next 1 hour candlestick opens up here. We opened up, came lower within the 50% of that fair value gap, and then we saw this push to the upside. Unfortunately, I was not able to frame the long setup as price tapped into this level. By just being completely transparent, just because I wasn't able to catch the exact low right here does not mean that this trade was then invalidated, because as you can see, what is this? This would be a rejection block. Even though I did not get the exact turtle soup at the low of this 1 hour fair value gap, price on the 15 minutes time frame, price created another point of interest, which is this rejection block. Now that I have this long wick inside the marketplace referred to as my rejection block, I can split this up into quadrants. From the opening price here to the low of the rejection block, I get my multiple key levels. I got my 25% right here, then I have the 50% right here, and then last but not least, we have the 75%. On the next 15-minute candles, I want to see if we can come down into the 50% here of this rejection block level, right? If we can come down into the 50% of that rejection block and see some type of rejection from it, basically showing that price has found support at this level, I can then frame my overall turtle soup reaching back above higher prices, which we can obviously identify this fair value gap right here, which price has just created off of this downtrend. We do have this fair value gap all the way back up here that we could potentially see the market come back up into. This is why it's very important to never have FOMO inside the marketplace. I missed the short at these lows, right? I missed that short. It is what it is. I even missed the long at this exact low. It is what it is, right? But the thing was, I never had FOMO or the feeling of chasing the markets or creating a setup that wasn't there. I wasn't able to capitalize on the short and I wasn't able to capitalize on this long, but I did see this rejection block. There's multiple opportunities within a market. When it comes to trading, you have to be very strict within your rules and what you're looking for, because at the end of the day, the only thing that you can control as a trader is yourself. You cannot control these charts or what these charts are going to do. You can only control how you react to it. And how I reacted to this was, I want to see price come to me. Price has to come down here to me and give me the exact setup that I want, or I'm not going to take a trade. This is the mindset that you need to have if you want to become a consistently profitable trader. So I'm going to let this chart plays out here and see what happens. So we can see here this next 15-minute candlestick opens up, comes lower, and then we can see here we come down into that 50% right there. As price came down into that 75%, price creates this long wick inside the marketplace. This is basic candlestick analysis, right? This would be referred to as a doji candle. This overall indicates that when price came down into 75% of this wick level, buyers immediately started to step in, and we create what's called a doji candle. Doji candle will be my confirmation. So once I get this doji candle as my confirmation, I was able to frame my long setup right here, and I was able to adjust my stop loss just back below the low of this 1 hour candle. If price can establish a low on the 15 minutes time frame like this right here, you can place your stop loss below the low of that 1 hour candle. My stop loss was around the low of the 1 hour candle. Price were to break above this 15-minute candlestick right here and see an expansion, I would then be able to scale into my position. Right, this is something that I utilize within my trading. If I'm able to catch a turtle soup at this exact low and I can establish this as a strong low on the 15 minutes, what I could do here is I could scale in and adjust my stop loss back below the low of this 15 minutes time frame. Let's see what happens. Our trade was then tabbed, reaching back above higher prices. See, price clearly broke back above the last high here of this 15-minute candle. At this point, I was able to scale into my position and I was able to adjust my stop loss very, very tight. And this was the exact trade setup that I took this morning, which made me a little over $2,000 in just about 30 to 45 minutes. As coming all the way back up here, tagging my take profit, we identified that higher time frame point of interest from that 1 hour fair value gap here. Then we got this 15-minute rejection block. Price came down into it. We're able to frame our long here, reaching back above higher prices. And that's gonna be it for the video. I hope you guys got a lot of value from this video. And like I mentioned, if you guys want access to today's PDF, the ability to live trade with me and my brother every single morning, as well as 100+ hours worth of educational content, lessons, and much more found nowhere else, you guys can click the first link description and join the Spark Trading community. And if you guys want one-on-one mentorship help by me and my brother Spec Trades to hold your hand until you're consistently profitable, that's going to be the second link description, where you guys can join the Spark Trading University. That's me and my brother's school, where we help traders go from failing to full-time traders within their first year. So if that's something you guys are interested in, that's the second link description. But before you leave, make sure you guys click that like button, subscribe to my channel if you're new, and comment what you guys want to see next. I'm your new mentor, Arkhamtrades. Be safe.